So everybody knows that student loans, both financing and refinancing, is an absolutely huge business for SoFi that was largely neglected over the last 3 years or so. Right now, the moratorium of people being lazy and broke and bums and not paying for their bills is going away in terms of student loans. Now, Anthony Noto went on, he did an interview, and he says that there is specifically a $200 billion total addressable market specifically for the student loans that they can actually refinance. He says that the average student loan is $70,000 at 6%. So he says there's two ways to refinance or to pay less fees. One is refinancing, which they can get at 6%, the people that are paying 6.5 to 7.5. Who's paying 6.5 to 7.5? Graduates and parent graduate programs for student loans, or the student loans that are 10-year time frame. You can increase this to 15 or 20 years, and this will reduce your loan payments. Besides for that, there's a brand new product that was just launched called SVL, SLV, Student Loan Verification, which now SoFi is helping employers match student loan contributions into a retirement act, 401ks. This is a brand new product that just came out with the government, and employees can now match student loan payments. So SoFi came out with a new product that allows employers and companies to work around this plan and, be better assimilated into this new retirement plan, which is cool. Guys, again, SoFi is an all-in-one stop shop when it comes to online banking. And the more they bring out these type of programs, the more they help not only, regular people, employees, employers, maybe eventually they're going to be doing something on the government side, the bigger SoFi can grow. Now, Anthony Noto, he did a few really, really good speeches. Around 2 weeks ago, he was in JP Morgan Fireside. This was around the 25-minute speech. This was absolutely a banger of a video. And then the other day, he was in Piper Sandler. And during the Piper Sandler event, there was a CNBC interview of Anthony Noto, where he was talking about many different things, specifically the student loans. He was talking about artificial intelligence. And actually, he uses Databricks, guys. I know we're not huge fans of Databricks, but it's really cool that they are using some type of software to allow them to have real-time data analytics. So this interview is going to be around 5 minutes and 20 seconds. I really want people to listen to this interview because I feel like a lot of people in the SoFi community, for some reason, don't watch these type of interviews, and it's literally jam-packed with so many gems of data in a course of a 5-minute video. Guys, SoFi has a huge week. If you missed it, by the way, tomorrow they will be in a JP Morgan presentation. After tomorrow, we have the CPI. The following day, we have the PPI. Then we have the shareholders meeting for SoFi, and then we have the Federal Open Market Committee. And we hope that there's going to be a pause in raising interest rates. And if that happens, SoFi should go to the moon. And SoFi, honestly, not clickbait, no BS, has a huge possibility of getting to a $10 a share price, double digits. If it's going to hold it, I cannot tell you yes or no. If it's actually going to get there, I can't tell you yes or no. But I can tell you definitively there is now a possibility, and a decent possibility, not like, oh, it won't really happen. Decent possibility that SoFi can now go into the double digits. I, for one, am super happy that I bought shares at 588. Wish I bought more, but it is what it is. But I did get into options, which people laughed at. Oh, you got in too late. You got into options when SoFi was like high sevens. I think I got into it right under $8 or right around $8. Well, we'll see what's going to happen. Thank you so much. Don't forget to like, share, subscribe. I have a link to my Twitter down below at Adam Bergmans MM. And if you want to buy me a cup of coffee, I have channel membership. It's $3 a month. YouTube robs me for $1. Don't demonetize the channel, please. And I get $2. In all actuality, thank you so much for all of your support. It's absolutely not needed, but greatly appreciated. Thank you and have a great day.
SoFi shares coming off their best week in nearly 2.5 years. The stock surging as the newly signed debt ceiling deal included a restart to student loan payments. Our Bob Pisani live at the Piper Sandler Global Exchange Conference for an exclusive interview right now with SoFi CEO Anthony Noto. Bob, take it away.
All right. Hi, Scott. Good to see you. Anthony, thanks very much for joining me. I just want to follow up on what Scott said right there. Congress has ended the student loan pause. Students are going to have to start repaying their loans. What does this mean for you?
Well, first of all, it was really important that we gave people the relief over the last 3 years not to have to pay their federal student loans. They could deal with COVID and the pandemic, but that's been over for about a year. So we really thank the representatives in Washington for making that bipartisan decision. I think now what it means is consumers that have federal student loans should look to refinance. We can really help them out. If they have interest rates that are in the high 6s, high 7%, we can save them money. If they have a term of 10 years, we can help them lower that payment. So as an example, if someone has $70,000 of student loans, which is our typical student loan refinancing, and they have a 10-year term at a 6% rate, their monthly payment's going to be about $775. Now, they haven't been paying that $775 for the last 3 years, so it's going to be an incremental burden for them likely in this environment. If they want to extend that to 20 years, they could lower that payment at 6% to $500 a month. Now, 20 years will cause them to pay a lot more than 10 years, but they can still pay at the same rate that they want and have that flexibility. Yeah. So people can save by refinancing at a lower rate. If they have high rates, they could save on a monthly basis to look for a chance to refinance at lower rates by spreading out over the term. And we think people will do both. We're already seeing people do the second of extending the term.
You were founded years ago to provide more affordable options for student loan payments, essentially. But you've expanded now. You're in personal loans, student loans, home loans. What is the state of the consumer right now? You have a view into a lot of loan business. Tell us what the consumer's doing right now.
Sure. For the viewers that don't know, we're in the loans that you mentioned, plus we do checking and savings account. We are a bank. We also have a brokerage account. We have insurance and we have credit card. And in the most recent quarter ended in March, we grew about 43% year over year. So there's a lot of demand in revenue. There's a lot of demand for our products. And we're continuing to see really strong deposit growth. We're continuing to see members pay their loans on time. And we're continuing to see them spend at a high rate.
So you're not seeing an increase in loan losses, for example?
We are still below the rates that we saw in 2019. There is a move towards normalization, but they're still below the levels that were back in 2019. And I'd say our consumer, important for the viewer to understand, is more of a high-end consumer, $100,000 of household income or more, and FICO scores above 680, but so far stable activity across paying loans, deposits, and spending.
You mentioned that you could save money to help people refinance their loans out there, particularly students' loans. The curve seems to imply that rates might be coming down. What does that mean? What happens when rates go down? How is that going to help you, and how is that going to help consumers?
Yeah, for consumers that are looking to buy homes, as rates come down, they'll be able to do that at more affordable prices. For consumers that have homes and need to refinance their mortgage, they'll be able to refinance at lower rates. And then those that have student loans, they can refinance with SoFi as many times as they want without penalty and without cost. There's no frictional cost, no closing costs. So they could refinance now and spread the payment out over a longer time period to lower the monthly payment. But they also could then refinance when rates go lower, as they're anticipated to do as we go into 2024 and 2025. The other thing that's important to note is as rates go lower, there will be less to make in checking and savings accounts, but we'll likely be able to continue to provide a really attractive rate for them.
My colleague, Scott Wapner, has a question. Scotty.
Anthony, it's so good to have you on Closing Bell. Welcome back. I just had a conversation about sort of where we are with all of this AI mania and the hype around it and the hope that has sent a lot of these stocks higher. And I'm gonna send you back to your younger days, to 1999. You're the internet analyst at Goldman Sachs, and you had a front row seat to how all of that led up in some respects, and then how it dramatically ended. So do you view anything from this period right now with similarity to back then? I'd love it through the prism of your eyes.
Yeah, there's definitely a lot of hype around AI. There are companies that are changing their names to AI, and companies changing their URL addresses or finding some way to put it in the description of their company. And consumers need to watch out for that. They need to protect themselves. The question they should ask a CEO or a management team that's prognosticating about AI is, how much revenue do you think you'll generate incrementally from AI? What's the specific amount of cost that you're going to generate from AI? And really get to tangible results that will impact the performance of that company. I think from a consumer perspective, they're going to benefit a tremendous amount. The question remains, will that translate into better revenue or better profits for a company? For SoFi, we use it in our chat bot, which allows us to use natural language AI to better answer consumers' questions, which does result in faster resolution times, lower contacts per customer, and also the ability to be able to provide more comprehensive answers across other areas of the company.